Let's quickly check in on Wall Street, where stocks have been bobbing in and out of the red. On your screen, the Nasdaq Composite Index flat, just marginally in the green, up about 0.1%. The Dow Jones Industrial Average is, as we speak, in the red. It's down about 0.15%. But despite a favorable jobs report coming out for the latest week, which has come in where jobless claims have dropped by 25,000 numbers against an expectation of the fall only being to the extent of 15,000, you still have a lot of worry on the street, and this is in large part driven by concerns over the overall macroeconomic picture, given the whole the impending fiscal cliff, which is just about 25 days away. In Europe, you saw shares gaining after the ECB, it's the European Central Bank, and the Bank of England decided to keep interest rates on hold.
And joining us this evening is Shahid Ikram of Aviva Investors. He's joining in from London. Shahid, many thanks for speaking with us. European leaders have once again failed to build consensus on a banking union. What will it take, you think, for these leaders to actually unite and address this crisis?
The Germans clearly don't want to be passing money around the European system at the moment. And with regard to the supervisory role, well, that role in earnest needs to have teeth. And for it to have teeth, then I would say that the first thing that needs to be looked at is basically the capitalization of the German Landesbank. So in some sense, again, it's really down to Germany whether we go ahead with this. And I think the real sort of sticking point that is on the horizon is the fact that Merkel does not have an election until autumn 2013. So it's very difficult to foresee any conclusion or resolution or solution with regard to banking union coming ahead of that election.
Shahid, Obama has spoken about raising the debt limit without much drama. Will this speech work at all as far as the political disagreement takes a turn with no deal in sight?
I think one very strong message that came out overnight was the fact that the House has now agreed to not recess at the typical time it would for Christmas and actually work through to find a solution. So I'm reasonably hopeful that what we find is some kind of compromise where we basically have a bit of the tax hikes that the Democrats require, but also spending cuts that come through with some solution on the debt ceiling. But I guess on a global basis, what do we find policymakers doing today globally? And that's effectively kicking the can down the road. So I think we'll end up with a solution for the sort of short to medium term, but then also more work to do in the long term. But as I said, the fact that the House is now willing to work through Christmas suggests to me that we're probably edging closer to some kind of medium-term solution.
And Shahid, going into 2013, what's your outlook on the global economy? Would you say we are in for a tough ride ahead?
I think we have huge headwinds for economic growth for 2013, and bear in mind the fact that the last couple of decades we've been used to using credit to bail us out, and clearly with debt to GDPs at current levels, the availability of credit or the usage of credit is going to be limited. My expectation is for the next decade or so we will end up with shallower economic cycles, but with more frequency. So I expect more weakness in 2013, and I guess if we were going to categorize it, we're probably going to muddle through the year.
Shahid Ikram, thanks very much for joining us on the show and talking to us about the outlook for the Euro area and also for global markets.